Welcome to From A to Zilling, the podcast that decodes the South Florida real estate market for savvy buyers and sellers. I'm Isaac.
And I'm Audrey. And if you've been following the market lately, your head is probably spinning. One headline screams, prices holding strong, while the next one is whispering about a slowdown. So what is actually going on? Today, we're going to unpack this puzzle, a market that seems to be speeding up and hitting the brakes at the exact same time.
Let's just kick things off with one number that tells you so much of the story, 3. According to some fresh data from Redfin, for every single active, serious buyer out there looking for a home in the Miami metro area, there are 3 sellers. That is the widest gap between buyers and sellers we have on record. It's even wider than it was during the peak of the pandemic frenzy.
And that immediately leads us to the billion-dollar question. With a flood of sellers and buyers suddenly becoming a rare species, does this mean the music has finally stopped? Is that historic South Florida real estate boom officially over? Well, the answer, as you might guess, is a little complicated.
To really figure this out, let's start with the clear, undeniable evidence that the market has, in fact, hit the brakes. And pretty hard, too. I mean, the signs are everywhere, if you know where to look.
Okay, so this data right here paints a really clear picture of a slowdown. According to South Florida Agent Magazine, active listings, the number of homes for sale, have surged by 32% compared to last year. But at the same time, actual sales have dropped by over 11%. And maybe the most telling number here, contract cancellations are way up. Nearly 1 in 4 deals are now falling through before closing. That's often because of last-minute surprises with insurance or some new HOA assessments.
And that data has a very real-world consequence. It means homes are just sitting on the market for longer. In a single month, the average time it takes to sell a property jumped from 34 days to 47 days. That is a huge drop in what we call market velocity.
Okay, so this right here is the heart of the puzzle. We have surging inventory, we have falling sales, and homes are taking longer to sell. Now, in any normal market, this would be the perfect recipe for a price crash. But that's not what we're seeing across the board. So what is propping it all up?
Well, the answer lies in this incredibly powerful force that really operates by a different set of rules altogether, the international buyer. They have always been a factor here, but right now, they are this market's true wildcard.
Get this. For the first time ever, according to the Miami Association of Realtors, the largest share of online property searches for Miami homes isn't coming from Latin America or Canada. It's coming from mainland China. It seems like relaxed investment rules and a real desire to move capital into stable, dollar-denominated assets has caused Chinese interest to just surge, overtaking longtime leader Colombia.
But here's the crucial point Isaac just hinted at. There is a huge difference between who's searching online and who's actually buying. When you look at the actual purchases, buyers from Argentina are the dominant force here. They account for nearly 1/5 of all foreign residential deals. Despite massive inflation back home, they are prioritizing capital safety, and they're doing it with cash.
And that brings us to what might be the single most important number supporting this market right now. 57%. More than half of all home closings in the entire Tri-County area are all cash deals. This insulates a huge chunk of the market from the biggest headwind there is, high interest rates.
Exactly. But what about the other 43%? For the local, mortgage-dependent buyer, the story isn't about international capital flight. It is about a painful and, frankly, historic affordability squeeze.
As reported by the South Florida Business Journal, the average 30-year mortgage rate that was quoted to a South Florida borrower recently hit 7.41%. To put that in perspective, that is the highest average rate among the 15 largest metro areas in the entire United States.
And let's translate that percentage into actual dollars and cents, because this is where it really hits home. A year ago, the monthly payment on a median-priced home in Miami-Dade was around $3,400. Today, that exact same home costs over $4,600 a month. That's a staggering $1,200 jump in a single year.
So it's no surprise then that when the National Association of Realtors crunched all the numbers, they found Miami has the worst housing affordability score in the entire country. A score of 1.0 means a market is balanced. The national average is already strained at about 0.95. Miami is all the way down at 0.71. That puts homeownership mathematically out of reach for a huge portion of the local population.
So how do we reconcile these two completely different realities? You have the cash-flush international buyer on one hand and the completely squeezed-out local buyer on the other.
It leads us to the big aha moment, the key concept that really explains everything. We are in a two-speed market.
A two-speed market is exactly what it sounds like. It's a single real estate market, but different segments are moving in completely opposite directions. You can think of it like two different cars driving on the same road. One is hitting the gas, while the other is slamming on the brakes.
And we've got the data to prove it. Just look at the difference between property types. Over the last year, the median price for a single-family home, which is still in super high demand, actually went up by 3.7%. But for condos, which are facing soaring insurance costs and all these new regulations, prices have actually gone down by 1.2%. Two different worlds.
And this split, this bifurcation, also exists by price point. The luxury segment, we're talking properties over $1 million, has a glut of inventory. Over 8 months of supply, which is a strong buyer's market. Meanwhile, the entry-level market still has less than 3 months of supply, keeping it firmly in seller's territory. This is exactly why some sellers are getting offers in days while others are just waiting for months.
So, armed with this understanding of our new two-speed market, what do the experts say we should be watching for next? I mean, where is this all heading?
Well, the consensus seems to be more choppiness. One analyst predicted a stop-and-go market until mortgage rates dip below that 6% mark. In fact, Redfin is actually forecasting a price change for Miami between 0 and -2% by the fourth quarter. And the experts are also keeping a very close eye on politics in Latin America and interest rate decisions over in Europe, since both could impact that foreign cash flow. And here at home, builders are already getting nervous. New construction permits have dropped significantly.
This quote from a panel of local experts really says it all. The market is resilient, but bifurcating. The market as a whole is resilient, right? It's being held up by that strong cash and international segment. But it is undeniably splitting into two separate realities. So with that in mind, our advice this week for sellers is this. You have to know which market you're in. If you're selling a luxury condo, your pricing strategy has to be aggressive. If you're selling an entry-level single-family home, you still have leverage, but you need to be realistic about buyer fatigue. And for buyers, our advice is to be patient but prepared. The data suggests some segments are softening, which could create opportunities. Get pre-approved now, so if rates dip or you find a motivated seller, you are ready to pounce.
Which leaves us with this final critical question. The South Florida market is basically a tug-of-war. On one side, you have that slowing lane filled with sidelined local buyers and a growing pile of sellers. And on the other, you have the fast lane, completely fueled by global capital. Which speed will ultimately win out and define the direction of the market? That is the billion-dollar question we'll all be watching. And that's your comprehensive look at the market. For a deeper dive, visit us at getzelling.com. I'm Isaac.
And I'm Audrey. And this is From A to Zelling. Join us next week.